Hello, everyone. I'm Chris Herbert, the Managing Director of Harvard's Joint Center for Housing Studies, and I'm very pleased to welcome you to the release of this year's State of the Nation's Housing 2024. It's certainly been a record-breaking year for housing, and mostly not in a good way. I'm looking forward to hearing about the report's highlights, and then a panel discussion with a group of experts we've assembled who can really shed some light on these trends in the housing market and talk about what we need to do about it to make sure that all folks have access to decent, affordable housing in thriving communities. But before we get started, I first have to thank the Policy Advisory Board of the Joint Center for Housing Studies, who provides principal funding for this report, as well as the 15 sponsoring organizations listed in the inside cover of the report, who represent all sectors of the housing market, who provide input to us in both in terms of framing what the report covers and making sure that what we present is complete and unbiased as best as possible. So thank you to those sponsoring organizations. So now let me turn it over to my colleague, Dan McHugh, a senior research associate at the Joint Center, who is one of the lead authors of the report. Dan will present the key findings of the report, and then we'll turn it over for our panel discussion. So Dan, welcome, and take it away.
Thank you, Chris. The story of the State of the Nation's housing this year centers around how households and housing markets are dealing with and adjusting to high housing costs. Whether you are a renter facing high rents that take up large shares of your income on housing, or you are a potential home buyer looking at high prices and high interest rates, or you're already a homeowner and you're facing high costs of ownership. And this goes for landlords as well, who see insurance rates prices rising and property taxes going up with the values of your house. So we start by stepping back and looking at prices and rents and seeing how we're still dealing with the legacy of these sharp rises in prices and rents over the pandemic, between 2020 and 2022, which leaves us with prices up 46% from where they were in early 2020, just a few years ago, and rents up, 26%. So these are things that are still effects that are still reverberating around the housing markets. On the price side, we see not only are prices high, but they're rising once again, up over 6% year over year at last measure. And it's really adding insult to injury. And what's behind that? We take a little bit of look at what's behind the rising, and we see that inventories. Here's a look at home inventories. They're still near record lows. We've had some kind of improvement in inventories over the past year, but still inventories remain about 30% below where they were prior to the pandemic. So very few options, and leading to pressure pushing up home prices among bidders for the short supply of housing that's for sale on the market. And part of that story and part of what's keeping those supplies of housing is fewer homeowners putting their homes on the market. We've heard about the lock-in effect of existing homeowners whose interest rates that they got, when interest rates were down below 3%, are much lower than what they are now. Interest rates have been hovering around 7%. So we can see the market interest rate here in this line, well above what existing owners have. And so in order to move the 50+ million homeowners with mortgages, the majority of those would face a sharp increase in costs if they were to move and get the same mortgage. So that's a real downward pressure on the home sales. And so the combined prices and interest rates have really driven down home sales to levels lower than they have been in 30 years. So it's really slowing down the for sale market. On the rental side, here's a picture of the actual level of rents in the line and the change in rents in the area here. We see how rent growth has slowed, but rents are still not going down for most of the country. 3 out of every 5 metropolitan areas are still seeing rents increase. And this is a problem for the record number of renters who are cost burden, with rents taking up more than 30% of their income on housing. And that is also, it's also a record number of renters paying more than 50%, severely cost burden renters, also at a record over 12 million renters paying more than half of their incomes on housing. So, I mean, that is a growing problem. And here, cost burdens for renters are rising up the income scale. And we actually see the biggest growth in renter cost burdens among middle income renter households. We see here, right in the middle, we see renter households earning between $45,000 and $75,000. Inflation adjusted dollars, mind you, really the cost burden rates doubling between 2001 and 2022, the fastest growth. And so this is leading to a much larger constituency of households facing cost burdens, and it's really raising pressures on policymakers and practitioners and across the board to do something about these rising rents, right? What can we do? Cost burdens are also rising for homeowners too. We have a concern here, not as much on the higher income and middle income levels, but we see cost burdens for homeowners really rising sharply for homeowners with the lowest incomes. And this is a particular concern when we see these numbers go through 2022. It's the latest we have, but since 2022, we've seen sharp increases in ownership costs, insurance rates, like I mentioned before, going up 20, 30%, up to 35% increases in your insurance costs in places like Florida. So really rising costs for it, that's putting pressure on low-income homeowners who are at the margins and have the little buffer, to pay for any kind of rise in their housing costs. But while we're concerned about low-income homeowners, we're also concerned that homeownership is increasingly out of reach for all but the highest income households. When we apply the current home prices to the current interest rates, we see how the housing payment that would be involved in paying for that, if you were to look for a house now as a first-time buyer, we'd see that the monthly cost that you'd have to pay would be over $3,000 for the median priced home in the U.S. This is a sharp increase, and well above, after adjusting for inflation, well above where they were, anytime in history. And so this is, in order to be able to afford a $3,200, monthly payment, you'd have to be earning about, $120,000 a year to qualify, with that type of payment, given, under standard ratios and qualification standards. And so that is really putting the brakes and really a high hurdle for potential home buyers. So it's really reducing first-time home ownership. The access to home ownership has really been cut off. Here we have a map also that shows more than half, in more than half of all metropolitan areas across the country, it would take an income of over $100,000 in order to afford the median priced home in the current kind of price and lending environment. So this has really led to a drop in first-time homeownership. Homeownership rates actually the growth screeched to a halt. Homeownership rates of younger adults under 35 actually went down over the past year. So this is really slowing down access to homeownership. And reduced access to homeownership is a particular problem for people and groups who have a history of having reduced access, not having the access to homeownership, and particularly made efforts to reduce the very wide and persistent racial homeownership rate gaps. It made those efforts much more difficult with the high costs of homeownership. And so we look at the history of these homeownership rate gaps and the history of unequal access to homeownership, and see how the homeownership rate gap in the first quarter of 2024, the homeownership rate gap between white households and black households was unchanged from where it was in the first quarter of 1994. So with 30 years without any progress in reducing a 27 percentage point difference between white homeownership rates and black homeownership rates. We see other gaps also remaining very high, and just the potential to do anything about this is that much more difficult when homeownership is that much more difficult to obtain. We also see, very different trends. We, in looking at construction on the supply side, we see those the same lack of housing, existing homes for sale has actually been helping increase single family home construction. We see here, single family home construction has been increasing over the past year, in reflecting the kind of lack of options that buyers would see on the existing home sales market. So it's been a benefit for them. We also see here, however, that the number of multifamily homes is dropping. So fewer and fewer homes being started. And that's a reflection of both the large supplies of rental apartments coming online over the past year and still currently, but also reflecting the difficult lending environment and the difficult financial environment for not only multifamily property developers, but multifamily property owners as well. We see here some examples of the rising costs of ownership that multifamily property owners are seeing, led by insurance costs, a real problem. The rising insurance costs is a big problem for property owners, and it's cutting into the whole property values, and it's really making it difficult. A growing concern that we have is, as the number of multifamily construction goes down, how low is this construction going to get, and how hard is it going to be to ramp that construction back up, given the finances, the higher costs, the lower income growth, and the higher cost of lending that multifamily developers are facing now. So that's a growing concern. But one thing that continues to grow is demand. Demand for multifamily and single family builders is growing. Here we see household growth at 1.7 million additional households in 2023 at last measure. And that's far exceeds the average of about just over 1 million households per year added during the 2010s. So we still are seeing strong household growth. And what's behind that? Well, we have 3 big generations, and the primary force now is Gen Z, adding 8 million households over the past 4 years. So really coming onto the scene and adding on demand for households. It's a big generation, shaping up to be even bigger than the millennial generations. If we look at the peak in births, as you see here, peaking in 2007. So it's a large number of young adults looking for homes now and in the next few years. But in addition to that, we've also seen increasing demand from immigration, driving up population growth. Over 3 million immigrants added to the population in 2023. And though their trajectories in housing are slowed and delayed by many issues, being driven by primarily asylum seekers who need work permits and have other challenges, but still, even if a third of this population forms households in the next 5 years, it's a big increase and it's really propping up demand. It's adding to challenges too, and with all of these challenges that we see in terms of affordable housing, one of the bright spots is the growing momentum to do something about rising house prices. And it's a two-pronged approach. The first prong is really what can be done at the policy level to help the markets, help the market rate housing be cheaper and more abundant. And we're seeing reforms at the local level, many things listed here, streamlining approvals process, really enabling a wider variety of lower priced housing options. And if the local level jurisdictions aren't doing this, states are increasingly curbing the amount to which local area jurisdictions can restrict development, and even some federal level action. So increased visibility and increased attention to the problem of restrictions on housing. But there's many households here whose incomes are too low for the market to ever be able to serve, and for them, growing need continues for assistance, housing assistance. There's a lot of numbers here, but we still see that housing assistance for low-income renters only hits about 1 in every 4 renters who qualifies for that, and the need is growing faster than we're able to grow the levels of assistance. So as a result, we have about 14 million qualifying households in 2021 that that don't receive assistance, and a record 8.5 million households who have worst case needs, which means they're spending over half of their incomes on rents, and and they have low incomes, and it's a very big challenge. It's a dire predicament for millions of households. But we have, we outline many of the challenges facing households. And the last one I'll review here is the growing challenge to address the impacts of climate change. And so we see with the number of climate and weather-related disasters that cause damage of over $1 billion going up and becoming more frequent every decade. So the average number of $1 billion disasters in the 80s was just about 3 per year. Adjusting for inflation, even that's up to 17 per year in the 2010s, and so getting more frequent. We have millions of households in harm's way. So growing need and urgency to do something to prepare these households before the disaster happens, so that our housing stock is better prepared, our households are better prepared, our infrastructure is better prepared. That is a major concern and ongoing and increased urgency for the housing stock. And so with that, let me turn it to Jennifer Ludden to introduce our panel. Thank you very much.
Thank you, Dan. Hello. Thank you for leading this incredibly comprehensive report and that presentation there. We've got some great panelists to kind of dig into how this is all playing out from their world. Their full bios are on the center's website. And let me introduce Priya Chayachandran, CEO of National Housing Trust, Crystal Cornegay, CEO of Mass Housing, which finances affordable housing, and Cheryl Palmer. She's chairman and CEO of Taylor Morrison, which is a home building company based in Arizona. Thank you all for being here.
Thank you.
So we did hear a lot here from Dan, but I just wanted to start out. Oh, and I should note that everyone who is following along, you can also follow along on X, known as Twitter. The hashtag is Harvard Housing Report. A lot to dig into, but are there any quick takeaways from you all first about either what stands out to you this year as something new or surprising? You want to start off, Priya?
I think it was encouraging that that rent increases have started to stabilize, but I think what was maybe not surprising but still alarming is that how many people are still housing cost burdened, and that continues year over year to achieve record highs. How many people in this country are struggling, and while supply is marginally increasing and rents are starting to stabilize, it's going to take a long time for those forces alone to satisfy the level of housing cost burden. So I think as the report concludes, a lot more is needed.
Crystal?
Unfortunately, Priya took mine. So the surprise about how many kind of moderately income, average kind of jobs, those households are being cost burdened now at record paces. And it just affirms that our economy is transforming into one in which work doesn't pay, right? And we've got to figure out how to get that balance better, because these are, if you're earning $50,000, $60,000, $75,000 and you're cost burdened because you can't take care of your basic needs, that's a commentary on our economy, not necessarily on just our housing market.
Interesting. Cheryl?
Yeah, I'll probably pick up on the similar themes for sale. I think given Dan's comments on more than 40% increases since the pandemic, I'm actually surprised how strong sales have been. And understand in the early days post the pandemic, with 3% interest rates, that makes more sense. But honestly, as we got to 8%, I think sales remain surprisingly high. Specifically, the report detailed some of the price increases since the 90s with monthly payments at, I think, over 50%. We look at it as a multiple of income. And just a few years ago, we would generally see multiples of incomes that someone was paying for their house, high twos, maybe 3 times their income. And today we're seeing, in the mid fours, and for the most affordable buyers in the fives, and that's just not sustainable. I mean, we know that new housing's had a distinct advantage given our builders' ability to buy down rates. But it just feels like the market's been up to most recently unscathed by the higher rates. I think that's changed a little bit most recently. The other 1 or 2 quick ones that I thought were really interesting in the report was just the stunning amount of dollars that are required to get the existing house stock to today's standard. I mean, I've been using the stat that the average housing stock was about 40 years old, but to see the $150 billion to get today's housing habitable or in good condition was stunning. And then maybe the last one I'd mention is on building on Dan's comment on the disparity that we're seeing from the report in ethnically diverse buyers, and the wide racial inequities in homeownership. Chris knows this because it's been a hot button for me. It's fascinating because at the same time that we're seeing that, we're also seeing our business completely get turned on the head, where the highest percentage of our buyers over the last, growing every year, but like we've gone from 65% on Caucasian to 35%. So I really can't recall a time where we've seen such a difference in the have and have-nots with housing and affordability and the change of ethnic mix.
Really interesting. Okay, Chris.
Well, since we do this report every year, you think there'd like to be anything that could surprise me, but I'll echo one of the things that Cheryl pointed out, which was, I think, the resiliency, particularly on the single family new construction sector. If you told me interest rates were going to go from 3% to north of 7%, and that we would have still be building 1 million single family homes, I would have said you were crazy. But I think in hindsight, what makes sense is that when you've got, as Dan showed, the vast majority of existing homeowners sitting on mortgages at 3 or 4%, there's just nowhere for people to go except for turning to new construction. And I think it also points to the strength of demand for home ownership, that people are still persevering in the face of high prices and high interest rates. So it's a little bit of maybe some good news that the home building industry is able to come through. The other piece is that we're seeing the median size of homes come down, and partly because, as the report points out, more townhouses are being built. So we are seeing that builders are responding by building smaller homes as well, but a whole lot more needs to be done on that. And the other thing I'll point out is that Dan actually did a nice job of addressing this in his presentation. That one of the things that surprised me, we've talked for a long time about the fact that the millennial generation has been the biggest in history, and that behind it, Gen Z was big, but not nearly as big. And we were going to have this fall off in demand for apartments, and that we were ultimately going to see a fall off in demand for entry-level home ownership. And one of the things we're seeing is that through immigration, that Gen Z generation is now bigger than the millennial generation. And that's already feeding through in strong demand for rental housing. That's going to really, I think, make for a soft landing for multifamily developers and property owners as we see that demand really catch up. Great figure in the report, if you look into it, where we show the supply of new apartments and the demand for new apartments. And that demand for new apartments is really ratcheting up. So I think that kind of demographic shift is something that's really important that we're keeping our eye on as well.
All right. We're going to stick with you, Chris. So we'll go back to Priya's point here, and let's just start as we start digging in. Start with the rent. The affordability obviously is the through line here, and let's start with the rent. I feel like there's this sense of people thinking it's going to go back to something pre-pandemic. Nothing seems to go back to whatever it was pre-pandemic, but interest rates have come down. It's not as crazy market as it was in 2022, and yet record high cost burdens for renters. Tell us more about what they're facing.
Well, as Dan showed, I mean, we've seen rents are up 26% from where they were just before the pandemic to now. The 26%, that's a big jump in just a few year span. We've seen rent growth really modulate. It's falling in the South. It's still growing in a bunch of places, but rent growth has really slowed down in the face of a pretty large supply response. But that rent growth slowdown still means that rents are locked in at prices that were very high. As you said, we're just not seeing prices come back down. rents and home prices tend to be sticky down. So what that means is we're seeing this record number of people spending more for rent than they can really afford. And the group I really want to highlight are the lowest income group. For people making less than $30,000 a year, which may not sound like a lot, but that means you're working full-time year-round at $15 an hour, and you're still 83% of those folks are cost burdened. 65% are spending more than 50% of their income on housing. And when you think about spending that much of your income on housing and the fact that your income isn't that high, the residual income, meaning after I pay my rent, what have I got left over every month to pay for everything else? For that group, it's $310 to pay for food, to pay for transportation, to pay for healthcare. And so while the rent stresses are being felt across the board, that poorest group is one where it's really cataclysmic for folks who really just don't have enough. They're making hard choices about rent and what they're eating this month.
And we're seeing credit card debt go up, I believe, also probably very much linked. On homeownership, Crystal, you try hard to increase homeownership. How is this difficult landscape affecting your work and the people you're serving there in Massachusetts?
Sure. Home prices are out of reach for a lot of our target audience. We continue to offer down payment assistance, but we think about down payment assistance needing it to be as flexible as possible. So it can help put private mortgage insurance premiums, right, which can affect ownership and the cost of that. Using DPA funds to buy points and write down rates and different kinds of ways of getting folks into housing, because sometimes you can afford to pay the mortgage, but these other things make it out of reach. And so down payment assistance where it becomes more flexible, because we encourage people to, if they can afford to get into a house, we want people to be responsible and reasonable. But if you can't afford to get in a house, it might be counterintuitive, but if the rate is 6%, 7%, right? It's like, how do we stay in touch with you to make sure when the rate goes down, right, that you can refi, because that's an option for folks, but we got to pay attention to that. So we are also building that into our servicing platform to make sure that we're with you all the way through this process.
And if I just might add to that, Jennifer, I think down payment assistance is so critical, and the report can document the fact that when you have median home prices as high as they are today, if you're talking about even like a low down payment product for a first-time home buyer, say 3.5%, but you add in that 3.5% plus the closing costs and other things you have to write that check out at that closing table, we're talking about $25,000 for a modest price house. The typical renter has nowhere near that amount. And we see in a lot of cases been increasing news reports about the fact that a lot of folks are going to the bank of mom and dad to help make that down payment assistance. But what do you do if you don't have the bank of mom and dad to go to? And I think programs like Crystal has at Mass Housing are so critical, particularly for closing those racial home ownership gaps. And Mass Housing, like other housing finance agencies, is doing a great job. But I will just say this is an area where there's a real need for federal expansion of assistance to really close that really important gap of cash needed at closing.
And then the underlying is, as it points out, and you all point out a lot, it's a lack of supply, a massive years-long lack of supply. So Cheryl, it is terrific that single family home production is up. But in this tough financial landscape, what are the challenges still that builders like you are facing?
Yeah, I mean, before I start there, I might just add one thing to the last two comments, because
Please.
they're so true. We are seeing the bank of mom and dad, in our sales and our closings at a higher rate than we've ever seen before. So I just want to double down on Chris's comments and the need. And I think it's part of why the resale market's been frozen, is not only are we seeing the bank and mom and dad, but it's requiring kind of rate buy downs, as you just heard, to get folks into a house. And that's something that Mr. and Mrs. Smith in the resale market may not have the ability to do to help that consumer. But
can you actually stick with this? Are you seeing more co-signing? Like, what else are you seeing?
We are seeing, I wouldn't say that's a dramatic shift because once again, with the rate buy downs, we're really, I mean, think about it. If I want to spend $20,000 to help a customer with rate buy downs, if I were just to discount the house to get to that same monthly payment that my rate buy down will help with, that's $60,000. So obviously, as an owner of a home that you're thinking of putting on the market to compete with what I can do for that same price house, it's 3 to 1. So I think that's the biggest thing that is, beyond the fact that people love their old rate, as you just heard. I think they're in the ability to help a new consumer get into their house is equally difficult. As far as the challenges that the industry is facing, they're always evolving. Over the last 18, 12, 24 months, it was all about supply chain. And I think most of that's behind us. And that was a really tough time for our teams across the country and certainly our customers. But coming out of that, I'd say it's more on that piece. It's not about the supply chain as much, but it's the quality of the workforce and how we've aged out so many of our workers. So I think that's one, because as you continue to have to redo things, it's costly. I think the primary issues for the consumer today, we've certainly beat up affordability, the rates, and consumers just don't know how to navigate this, just like that 20,000 versus 60,000 example. It's not intuitive to the consumer, so they're trying to figure it out. I think the work from home is confusing on what people are looking for in their new home. So there's just a lot going on. And I think the other consumer issue that we're seeing is, and maybe it's around the election, but just no urgency. It could be the election, it could be the volatility of prices, it could be our interest rates going up or down. And then the last one that is worth mentioning, and I say this is, the builders are feeling it, but ultimately it affects the consumer, is municipalities and the difficulty in processing maps, anything, the delays, the cost of regulation continue to hurt the very folks that everyone absolutely reports they're trying to help, but all these things continue to elevate the costs. I mean, I have some markets where a permit could be over $100,000. So that's not talking about the land. It's not talking about a single stick. It's just the permit. That's my starting point. And I'm seeing that more and more. So it gives you an idea. And then we can get to litigation and attached product and the cost of, that's coming at you no matter what. But that density is how we begin to help affordability. So it's complicated, but that's what we're doing, is trying to work through it every day.
Priya, another just stunning statistic in here that some of them are also about the loss of affordable housing, right? As everything goes up, there's less and less that is at the lower end of the market. And I've seen you write about how this is kind of getting overlooked in the real focus on building more housing, the importance of preserving what we have, that more people can afford. What can you tell us a little bit more about what is at stake and what do you see happening?
Sure, I think that was one of my favorite parts of the report. I think it was figure 23 showing the shift since 2012 to 2022 of the number of affordable, or I think they call them low rent units that are available. And I think it talks about that between 2012 and 2022, we lost 6.1 million apartment homes below $1,000 rent. And while the report points out that we're increasing construction, most of that, whether it's on the homeownership side or on the rental side, is at the higher end of the market. We don't build starter homes anymore. We don't build triple deckers like Boston is known for. We don't build B-class apartments. And so what we really rely on for affordable housing is that existing housing stock, because when we build new, we tend to build luxury housing. And so it's so important when we see these levels of housing burden to really hold on to that affordable housing stock we have. But the challenge right now is that a lot of that stock is vulnerable. It's vulnerable to climate change. It's vulnerable to high operating costs and no ability to reinvest in the properties. It's vulnerable to pressures to convert from affordable housing to market rate. And it's vulnerable to physical obsolescence.
Chris, and does anyone want to jump in on there? Cheryl, do you want to jump in? We can come back to solutions to this, or I can keep going. Well, we'll come back to that problem, Priya.
One thing I would add, Jennifer, is just, I think this is an issue that I think I would circle and say, stay tuned for State of the Nation's Housing 2025. If, what we have in the report in terms of the loss of low-cost units, the loss, so to speak, is mostly units being pushed up the rent spectrum. There's been an opportunity over the last 10 years to upgrade those units and get more rent from them. It's been a pretty favorable operating environment for property owners in terms of low costs of capital and the like. What we've seen over the last couple of years is a real deterioration in that operating environment, not just because of the cost of capital, but as the report talks about property taxes, insurance, and all other sources of operating costs. And as we saw in the report, we talk about, I think it's from, I don't want to get the source wrong. I think it might have been RealPage talking about this real slowdown in net operating income for professionally managed apartments that had been pretty robust. But if you take that growth in net operating income for professionally managed apartments, which are the Class A buildings, and say, what's happened to Class B, Class C? I think the operating pressures in those properties is getting severe. And in those cases, what happens is you stop making investment in maintenance and those other things you need to do to keep up those properties and the health and safety of tenants. And I think next year's report, we're going to be talking a lot more about the loss of units, not from the moving up the scale, but from the fact that these financial pressures are going to become really significant and severe and lead to bad trade-offs on the part of property owners.
Interesting. Okay, sticking with you, Chris, a lot of discussion here about how the burdens are moving up the income scale. So, 75,000 and above households are spending, an unaffordable portion of their rent, of their income on housing. What are the broader implications of this?
I think I would say one of the biggest implications has to do with the politics of affordable housing. So if you go back 10, 15 years ago and you talked about pressures on affordability, you're mostly talking about is very low income people who are having trouble making the rent. And the fact, as Dan said, for people making between $45,000 and $75,000 a year, only about 1 in 5 of those folks are paying more than 30% of their income. And they weren't that stressed out. Now, when you have 40% of those folks are paying more than 30% of their income, there's a lot more financial stress. Now, the trade-offs there are not as dire as they are for poor folks. People at that income level aren't making a choice about whether they can have protein in their dinner. They may not be able to go out to eat as much, but the trade-offs aren't as dire, but they still hurt. And they also make it difficult to save, to become a homeowner and the like. And so what we're seeing is a lot of pressure across the country on politicians at the state and local and federal level saying, what are you going to do about housing affordability for me? And so I think that's democratized what I say is the housing affordability problem, which is a good thing in the sense that we're getting a lot more political attention on housing. But I think we need to bear in mind that the solutions are different for people who are very poor and for people who are in that middle income group. We're talking a lot about the need for zoning reform and the need to ease the ability to supply housing and modest cost housing. Absolutely. And that's what we really need to do for those folks making $45,000 to $75,000 in income, because we don't have deep enough pockets to put a lot of subsidy money directed to that group. With the caveat to the conversation earlier, we do need to think about down payment assistance for those folks to get them into home ownership. So I think the solutions are about regulatory reform, easing the ability to produce a lower cost housing by the private sector. But we can't lose sight of the fact that for those poorest households, we're still going to need to expand the housing safety net.
Crystal, what about, another issue that you guys brought up was it's just harder, it seems harder and harder to close the racial homeownership gap. I mean, it's been stuck for decades. I do remember hearing very briefly and early in the pandemic that like there was quite a significant little bump in Black homeownership, and then that kind of evened out. I'm not sure. It didn't sustain. But what do you think is needed for meaningful progress in this nearly 30% gap between Black, Hispanic, and white homeowners?
Well, this is the same answer, right? For all of these things, it's like you got to have supply, but you also have to have solutions that address the demand side, right? Because of, historic institutional racism creates these barriers to entry for people of color into homeownership that don't necessarily have anything to do with, is there a house to buy, right? Because then there are these other things like the appraisal gap, which we've heard about. In Massachusetts, at least, a person of color is more likely to be denied a mortgage, even if their income is above $75,000. And so, there are other things that are going on. And so not only do we have to have supply side solutions and demand side solutions that go together, but we have to have them that are also targeted, right? And so one of the things that we've done in Massachusetts is to think about the places where people of color mostly live and mostly purchase, right? And how do we target our resources both in terms of homeownership production, but also in offering down payment assistance in those communities, because you can't have a solution that's like, let's just do more of everything everywhere and think that you're gonna decrease this gap. You have to have targeted solutions around that gap and how that works.
Cheryl, do you want to jump in on this? Because I know that you talked about this from your changes you're seeing and things from the supply side, just the racial gap, and what does that look like from where you are?
Yeah, and like I mentioned, so maybe I'll go two different places with it, because I mean, listening to Crystal, some of it's unfathomable to me that, with our mortgage company and the kinds of things that Crystal is speaking of that's happening every day. It's not okay. I mean, I know that builders, and we're all working hard to create efficiency to bring down the cost of housing. So it's probably a little bit of two separate issues, right? And it's everything about efficiency in the building envelope over the last many years. There's been panelized products, building sciences. We're slow to make this happen. I think some of those solutions will ultimately be there. That's 3D or Hercutech, but today we're just not seeing the cost advantages to help bring down. We're trying things, square footages, I think, as Dan or Chris mentioned, are down. I think everyone's getting very creative in ways to deliver houses, tiny houses. But ultimately, the fees and design guidelines are just off the rails, and it's keeping prices higher. And I think, once again, impacting the folks that we need to. This probably won't be a popular answer, but, I think back to my days in the UK, my housing days in the UK, and there was just no maps that were ever approved without an allocation of units for affordable housing with very specific criteria. And so it's built into the underwriting. So it absolutely resolves it. And we are all over the board across this country. Today, the fees and the requirements don't make that possible, and the regulation's not there. And, I think we'll continue to work with agencies on specialized programs for low-income buyers, but it just feels like every corner we go, there's red tape. And I think my last comment, and maybe, as Chris did, I'll blur this with kind of zoning reform, is we have to really understand the problem and what Crystal said to be able to fix it. Because I'm starting to hear about solutions, that we're just going to take up minimum densities. And that's going to require, if it's in California, I think it's SB 330, and there's these upzonings going on, but there's not an understanding of the relationship to the infrastructure, to the cost of construction to the cost of maintenance afterwards. So some of the things that we think are helping, because they're not real solutions, they're actually not helping at all. And it's making housing even more expensive because some of these products aren't cheaper. I know there's these RENA numbers with higher densities in California we're trying to solve too. So I am so on board with Crystal's comments. We can't just keep doing more of the same and just throw things at the table and the wall and hope they stick. We have to come up with real solutions to begin to solve for this.
I want to add a little bit of color. So oftentimes when we talk about the racial homeownership gap, and not just with the racial homeownership gap, we conflate race and income, right? And the racial homeownership gap and the data show that income is not actually the only challenge, right? Now, true, more people of color have lower income than white folks. And so income is a barrier to homeownership, but there are some real barriers to racial homeownership that don't have anything to do with income. And so if we had a program, so to speak, or some policy or whatever, that was like, how are we going to get reduce our racial homeownership gap? Well, why don't we focus a homeownership program on people of color who make over $75,000, right?
Yeah.
It's like, Len, we could really start to get at that instead of conflating these things and then having to feel like, oh my gosh, this problem is so huge, we can't really get to it.
And so, Crystal, you're suggesting that in addition to income and mortgages, you're saying there's just a racial barrier that is
Yes,
stopping people,
yes,
markets from getting housing.
yes, yes.
They're
And
just
it's an intentional racial barrier, right? We all know this, right? It's like it's historic racial institutional racism. We still have deeds in Massachusetts, which I'm sure they do across the country, that say this house can't be sold to a Black
Yeah.
person or any other person of color. Now they're illegal, but they exist, right? We
Yeah.
haven't wiped that out. Those things
Yeah.
actually exist. And so programs like special purpose credit programs, in which we start to get at the idea that we need special purpose credit underwriting things in order to get at this issue is real, because there's this whole idea that there are these barriers that don't only have to do with income
Right.
and credit.
That's a really, I feel like could have a whole discussion on that and maybe bring in the zoning challenges as well. But thank you for that. I do want to get to a few more points here before we run out of time. Priya, you know, the rent on the rental part side of things as well, something that comes out in here is, I mean, we know the US has not given enough, you know, federal subsidies for renters, falls so far short of the need. And it has for decades, but that it just is growing. The number of people who need rental assistance keeps getting bigger while rents keep getting higher. What does this mean for the work that you're doing? What do you see?
Yes, first and foremost, it means that we're not going to run out of customers anytime soon. But I think last time I checked in 2020, the data as of 2022 is that rental assistance serves 5.2 million households in the US. I think according to this report, it's almost 25 million households that are cost burdened. Rental assistance has not kept up with population growth, and it hasn't kept up with growing income inequality. I mean, Section 8, which is just one part of rental assistance, was repealed in 1983. I mean, most of what we're talking about are programs. The voucher program has increased slightly year over year, but we've never, created new opportunities for rental assistance or massively readjusted for the demographics of the 21st century. And a lot of people are out of luck. And Crystal talked about, you know, we have supply solutions, and supply is great, but you equally need demand side solutions. And how powerful would it be if we had this 1-2 punch of creating more supply and helping people with their housing stability, being able to afford that housing. And oh yeah, that would also help with some of our preservation challenges, because then we would have stable streams of income to support that housing. But we tend to be a pendulum. We go all to one side or all to the other. And I think what we need is both.
Just to put a little color on the nature or the issue about the lack of a housing safety net. So, as Priya mentioned, we have 5 million folks who are assisted and 25 million who aren't. That number about that we say 1 in 4 folks who are income eligible get rental assistance. So that number has stayed roughly the same. It's gone up a little bit, down a little bit over the last 20 years. So at one level, you might say, oh, well, we're keeping pace. But if the number of people who are in that category is going up, then the 1 in 4, well, the 3 in 4 who aren't getting helped is getting much bigger. And the other thing is the consequences in this housing market of not getting that assistance have gotten worse. So HUD has a measure called worst case housing needs, which means if you have very low incomes, making less than 50% of area median income, so you're eligible for most federal programs, and you're not getting assistance, and either you're spending more than half your income on housing or you're living in severely inadequate housing, the number of folks in that category in the last 20 years has gone from 5 million to 8.5 million. So the number of people who aren't getting assisted is growing and the consequences are bigger. So the failure to really expand the housing safety net has really significant consequences for the folks that Priya is providing housing to through her organization.
Right. I'm going to go a little bit up the income scale again to middle class housing, which has come up as well. Crystal, you've talked about how we're not building housing for the middle class anymore. I mean, like, how can a public agency like yours address that?
So one of the things that we know to be true is that private businesses, right, this lack of housing is now affecting the economics of private businesses, right? Because at least in Massachusetts, and I'm sure in other places, the high cost of housing is a barrier to attracting and retaining talent. And private businesses want to help be part of the solution, but it's hard to figure out how. And so we've been trying to think about ways in which corporations can participate. Now, the main way corporations participate in affordable housing is through the low-income housing tax credit. That's the most traditional way, and that's mostly been banks and other kind of financial institutions. More recently, you're seeing corporations like Amazon and Google, the big tech companies, getting into this and trying to help figure this out. But there are also cases of health insurers and health systems trying to also help figure this out. But we've been trying to work on a tool in which we can make co-investments with private capital to help kind of really write down the cost of the capital stack so that we can get middle income housing built at a pace and a number that still leaves most of public resources for lower income folks, but acknowledges the fact that, it's going to take some public resources, particularly in this market, to help address this. But really, it's how do you use the public resource to leverage private capital to bring this to fruition. And so that's really what it's going to take, right? It's like we need one of the things I like to say, we need all the things, and everybody's got to be a houser, right? Everybody's got to get into business because we are, this is a crisis. And so we need everybody's hands on deck. But we particularly with affordable housing, the system, while not rocket science, is complicated. And so we need to create paths for which private capital can come in. Private capital also has to understand it's not getting 20% returns on affordable housing where, where people are making $50,000, right? And so so we've got to educate each other and come together and find a solution, because it is our problem. It's not just, their problem.
Yeah, anecdotally, outside my work life, I have heard of someone who turned down a job because they could not afford housing. And are thankfully living back with their parents. Anyone else want to jump in on the middle housing issue before we move on? Okay, 5 minutes left or so. Zoning. Chris, you want to start? I mean, what are you? It's obviously a local issue. There's a lot going on in different little states and localities. Are you seeing some things that you think are good models or most effective? What's your look here?
We're definitely seeing a lot more attention to this, and we're seeing a lot more action. And so most notably, one of the things that's come under scrutiny is the fact that so much land is exclusively zoned for single family housing. And it's because the high cost of land is a big driver of the high cost of housing. Making more efficient use of land is a key part of how do we get housing that's more affordable. So we've seen a bunch of states who have basically eliminated in one form or another single family zoning, meaning that they're going to allow widespread adoption of more than one unit on what housing, that land that had been zoned for single family housing. So that's definitely a move in the right direction. I think, on the margin, that'll help our issue. And I don't want to belittle that, because some people say that, what's the silver bullet we need to solve our housing problem? And as many folks here have said, it is complex. And what that means is we don't need one solution, we need many solutions. And the phrase we like to use is we need silver buckshot to be able to address all these things. So limiting single family zoning is one way, getting greater density. I think we also need to allow for more multifamily housing in a whole variety of places. And I'll shout out to my own state of Massachusetts, which passed a law a couple of years ago that mandates that every town served by mass transit. So these are places where people can get from the outskirts into the center, have to have a minimum amount of area, and it's typically about 50 acres or more in their town that's zoned as a right for 15 units of housing per acre or more. It's not a lot, although it's been controversial in the state. In a lot of communities, most communities have embraced this. And it allows you to maintain the character of that town. But now you're saying there are places in town where developers can come and put housing at a higher density that'll meet the need for apartments or townhouses or the like. That kind of a law, action by the state, is really important, because the conversations at the local level are really difficult to overcome opposition. And when the state says, thou shall, then it's not a question of whether we should, it's how we should. And so I think those kind of conversations are really important, allowing more density of housing in places where there's good access to transit. One thing I'll call out that I think hasn't gotten enough attention is we've been taking down single family housing as the kind of the enemy here. And if you look at what a lot of folks aspire to, it's a single family house. And I know this is going to be, not what most of my friends in the urban planning profession want to hear. Is I think we have to recognize there's value in single family housing. But what we have right now is a lot of zoning that's acre minimum, half acre minimum. And a lot of us probably grew up in communities where you had 50 by 100-foot lots, and you built a smaller single family house on that lot. And so one of the kind of reforms I'd like to see is not just eliminate single family zoning, but really get at the fact that when it's zoned single family, the amount of land you need to have and the size of house that's allowed is a lot smaller. So we're making some progress on zoning, but we certainly need to do more.
I think we have time for one more question. Is that all right? Do I need to
Yeah.
wrap up? Priya, jumping around so many topics, but I did want to come back to you on the issue of climate impacts, extreme weather impacts, and the older housing stock and cheaper housing stock being so disproportionately vulnerable to that. We talk about building for resilience, but when you already have, a 40-year-old building, what can you do, or what are you seeing happen? What would you like to see happen to maintain our old housing stock that's affordable, but is really vulnerable to these extreme weather storms we're having?
Yeah, I think, Jennifer, that's a hard one. I think it's, as you point out, it's easier to think about resiliency and efficiency measures on building new. I think the easiest part, and I think what the Inflation Reduction Act is providing resources for, are thinking about energy efficiency measures, thinking about renewable energies, incentivizing those through access to low-cost capital. I think the resilience is the harder part for existing housing. I think you can think about resilience hubs, you think about an old Section 8 community, maybe, most Section 8 residents are older, often have medications. We're seeing more heat events and flooding, power outages. So thinking about developing a community space with maybe a generator run refrigerator where you can have medications, access to cooling or heating in power outages, building those at existing affordable housing, developing them, access to generators. I think the other one, and this is a hard policy decision in addition to being an expensive one, is thinking about resources to sometimes move where affordable housing is. As Crystal talked about, affordable housing was often placed in places that are vulnerable intentionally. Those were intentional decisions. And it's going to take that equal intentionality to undo and move those. It's also going to take money to relocate that housing to maybe higher levels or more stable ground.
I want to add one more comment.
Sure, quickly.
To a point that the report makes around cost burden for homeowners under $30,000. Well, when we talk about climate resiliency and decarbonization, we're talking about those people too. And so if they can't even afford the house, then we have to find a way to help them decarbonize those homes as well, because that's a big part of the building sector that we're looking at. And as Priya talks about preservation, she doesn't necessarily only mean multifamily rental. We've got to preserve these single family homes as well, and we can't lose track inside of that. And what happens in a home in which you're under $30,000, you can't afford things, right? Somebody shows up and say, let's put solar panels on the roof, and you're just like, but I need a whole new roof, right? And so it's like these things become bigger and bigger. And so we see this as an opportunity to both do preservation as well as preservation in to make homes more resilient.
Thank
I
you.
know we're running a little long, but I wouldn't want to leave without giving Cheryl a chance. Do you have anything you want to add on this, Cheryl?
Well, I appreciate it. I think you guys have said it so well. I think my parting comment would be, we're talking about all these strategies. We just need tolerance around all of it. That's a shelter we're trying to provide, right? And right now, you said, Chris, we need multifamily acceptance. I think we need manufactured housing acceptance. I think we need more mixed use. I know that we're running up against on SFR, new Grand Yardley horizontal apartments. It's like once people get into these areas, they don't want anything else in their neighborhoods. So if it's densities, if it's product acceptance, if it's ultimately, if there's a way to figure out commercial conversion that makes sense, we're gonna have to do all of it to solve for all the problems we've just spent an hour talking about.
Chris, any last words?
I'll leave it to there. Jennifer, you can close this out.
All right, this is really fascinating, guys. I really, really appreciate all of you being here. The full report is available at the Joint Center for Housing Studies website. You will also find very cool interactive maps that explain a lot of this in stark detail. Thanks again, Chris, Dan, and everyone. Have a great day.
Yeah.
Thank you.
You, Jennifer.